All right, welcome to TalkTickers. So, when a company drops its earnings, the market's reaction is pretty much instant, right? Well, for Bright Horizons Q2 results, that reaction was, well, it was loud. So today, we're going to break down exactly what went down, why the market loved it so much, and what this all means for the company going forward.
Okay, let's just jump right in with the only number that really matters the day after an earnings call, and that is, of course, the stock's reaction. Bright Horizons absolutely surged, popping a massive 10.6% in the very next trading session. Wow.
Now, you got to understand, a move like that is not just random market noise. No way. That's a verdict, plain and simple. It tells you the big money, the institutional investors, they didn't just like what they saw, they loved it. And they're not just clapping for the quarter that just happened, they're placing a big bet on the company's future. And check this out. This wasn't some quiet little drift upwards. Look at the conviction here. The trading volume absolutely exploded, spiking to nearly 3 times its normal level. You know what that means? It means investors were falling over themselves to get in, aggressively buying up shares. This was a fundamental re-rating of the company's value, happening in real time.
So you're probably asking, what on earth did they report to get that kind of reaction? Well, it's pretty simple actually. It was a clean, decisive beat across the board. No weird accounting, no asterisks, nothing to explain away. Just solid, impressive performance.
Let's get into the nitty-gritty. So, on the top line, revenue came in at $731.6 million. That's a solid 9% jump year over year. Nice, but the real story, the thing that gets investors excited, is the bottom line. Adjusted earnings per share hit $1.07. That's a massive 22% leap from last year. And yeah, both of those numbers just blew right past what Wall Street was expecting. And you know, CEO Stephen Kramer, he summed it up perfectly on the earnings call. He talked about strong execution and how essential their services are. Now that might sound like standard corporate talk, but here's the translation. He's telling the market, hey, this wasn't a fluke. This is what we do, and you can expect more of it. He's signaling that this performance is sustainable.
Okay, so a beat is great, but where did it come from? Let's pop the hood and deconstruct this thing. Because the strength here wasn't just one single thing firing on all cylinders. Nope, it was a really powerful 1-2 punch from 2 different parts of the business.
So the best way to think about Bright Horizons is like it's a hybrid vehicle. You've got 2 engines working together. The first one is the full-service centers. This is your reliable, steady foundation. Think of it as the dependable gas engine. And then you've got the backup care business. This thing is like the electric motor that provides that sudden, high-octane burst of acceleration. It's the growth engine. So let's start with that steady foundation, the full-service centers. This part of the business just chugged along, posting a really solid 7% revenue growth. That's coming from more kids enrolling and some price increases. It's exactly what you want from your core business. Predictable, solid growth. But then, bam! Here's the headline number. That backup care segment, its revenue absolutely exploded. We're talking 19% growth year over year. And get this, it wasn't just them jacking up prices. This was driven by a huge surge in parents actually using the service, especially during the summer, when school's out and they desperately need a flexible option. This right here, this is where the big surprise came from.
Okay, so the backup care story is great, but let's circle back to those full service centers for a second. Because even though the growth is a little slower there, it's actually a super critical piece of the puzzle. If you really want to understand where this company's profits are headed, you have to dig into what's happening inside those centers. And this chart, this tells the whole story. Look at this. Over half of their centers, 54% to be exact, are already running hotter than they were before the pandemic. That's fantastic. But the real story, the golden opportunity, is in these other 2 slices, that middle group and that bottom 10%. Right now, they're a drag on profits. But here's the magic. Every single kid they add to those centers, that revenue drops almost pure profit to the bottom line. This is the road back to peak profitability.
Now, a quarter like this doesn't just happen by accident, right? This is all part of a really clear playbook that management is running. They're pulling on a couple of really powerful levers to drive this growth. So let's take a look at what those are.
First up is something they call the One Bright Horizon strategy. And it's pretty smart. Instead of just selling one service to a company, they aim to become the whole shebang. It's like a land and expand approach. They'll get in the door with, say, a childcare center. Then they'll come back and say, hey, how about adding on our backup care service? Then, what about college coaching for your employees' kids? Before you know it, they're completely embedded. It makes them super, super sticky and hard to replace. The second lever isn't even something they control. It's this huge tailwind from the government. So there's this thing called the 45F tax credit. Basically, it's a big tax break for companies that help their employees with childcare. And guess what? It just got supercharged. The government more than tripled the maximum credit a company can get. So now, when Bright Horizons goes to sell their services, the math for the client is just a no-brainer. The ROI is massive.
Okay, so that's the story of the quarter. A strong performance, a smart strategy, but what about the road ahead? Well, management's guidance and what they said during the Q&A gave us some really clear clues about their confidence and where they're focused. And look, they're not just saying things are good, they're backing it up with numbers. They went ahead and raised their forecast for the full year, and they gave a really strong outlook for the third quarter. That's not a company that's just hoping for the best. That is a loud and clear signal that they believe the momentum they have right now is going to continue.
Digging into the Q&A with analysts, a few key things really stood out. First, their UK business, which has been a headache for a while, is finally on track to stop losing money by the end of the year. That's huge. Second, they're not going crazy with acquisitions, they're being smart and not overpaying. But the third point, this was the big one. Management basically said there is absolutely nothing stopping them from getting their profit margins in the main business back to where they were before the pandemic. I mean, that is a huge statement of confidence.
All right, so let's put it all together and land the plane. What's our take here at TalkTickers? After digging through this monster quarter, what's our call on the stock?
We're initiating our coverage with an outperform rating. For us, the thesis is actually pretty simple. It's a two-part story. First, you've got that explosive, high-margin growth from backup care. That's no longer a question mark, it's a fact. And second, you have a really clear and I think now de-risked path for them to get their profits back up in the core business. It's a powerful combination.
And now for my favorite part, the outrageous but plausible trade idea. This is what we're kicking around the investment committee. How could you actually structure a trade around this thesis? So here's the idea. A long-dated contingent call spread. What does that mean? Well, you'd buy some call options that are way out, like 18 to 24 months from now. That's your bet on the long-term story. But to make it cheaper, you'd also sell some call options at an even higher price. Yeah, that caps your potential profit, but it drastically cuts your upfront cost. See, this isn't a bet that the stock's just going to go up tomorrow. It's a very specific bet that management will deliver on that margin recovery story over the next couple of years. So really, the question going forward has changed. It's not if Bright Horizons can get back to its former glory. It's now a question of how fast. How quickly can they turn around those underperforming centers and unlock that profit potential? That's the story we'll be watching. And of course, as always, this is not financial advice.